Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Well, trade 20 was an excellent trade. It lasted about a month. So that lines us up for trade number 21. What is Adam going to do on this one? Who knows? Let's find out though. So you'll notice on our chart that we exited a position, and I have to say this. I'm going to filter in here a view from where I was the day that I couldn't record the entry of trade 20. But this is actually the New River in Virginia. And the reason I'm showing it is it's like trying to cross a river, picking my exits and entries. It looks treacherous. There's a good way through it, but it's just hard to tell what it is. So on this particular day, we are going to go ahead and make an entry. Adam's decided to take the executive decision and make the entry at the close of this day on this candle. You can see that price is pretty close to where we exited, and we're hoping to pick up some additional gains. You can watch that order go in now, and you can see that it fills, and we are off to the races on trade 21. Okay, the next day on the 29th, the market gapped down just slightly, but toward the end of the day, it had a positive day. And I'm going to show another spot called Pilot Mountain. And I feel like I was walking down this path thinking about trading and thinking about, well, how do you know when to make a left, when to make a right? It's very difficult when to make the entry, when to take the exit. You can see on this particular day, the market's up a little bit. Do we wait and let it run a little bit more? Do we go ahead and take an exit? Well, I'm going to tell you that on this day, Adam decided to take the exit. So we picked up a small gain, I think just around 0.5% or so, take the exit, and we'll call trade 21 over. Let's head over to our tracking sheet and see how we're doing. Go. All right, that was a pretty quick trade. The entry was on June 28th. The exit is on June 29th. How did we do? Well, the S&P was up a little bit. It was up just over 0.5%, and that means that year-to-date is 14.56%. Year-to-date on the S&P 500 is pretty good. We're about halfway through the year, 14%. That's pretty good. One of the things that I talked with some friends about is, we had a down year last year, minus 18%. I typically don't see a lot of down years back to back, although I'm not saying it doesn't happen, but it's pretty rare. But this is a pretty decent recovery. We're not quite back to our peak dollars, so we don't have all-time highs, but 14.56%, not too shabby. On that particular trade, we were in there one day. We picked up 0.53%. That brings our year-to-date total to 26.13%. So still ahead of the market, picking up a little more gain. Year-to-date, 14.56% on the S&P buy and hold strategy. Our trading strategy, 26.13%. I mentioned last time I added in a metric of percent winning trades. We were around 80% before. We're now almost 81%. Benchmarks that I've seen for this particular metric try and target something greater than 50%. If you're looking at strategies and trading strategies, might be a good idea to be looking at something that produces greater than 50, although if it's big wins and small losses, there's a case to be made that you don't even need 50%. But I think to reduce some of the volatility, that's the target that I look for. I added a new metric in this time called the win-to-loss ratio. I have a new trading friend that he and I were talking about this ratio. He actually introduced it to me. I don't know if I can use his name, but I'll just tell you that I'll just refer to him as K. K actually introduced me to this ratio. I did a little bit of research. The target on that is trying to get to better than 2.1. I think right now Adam's working at about 2.68, so some folks might recognize that ratio and see some relevance to it. Back into the charts here. This is a good year-to-date comparison, just buy and hold the S&P versus trading SSO. You can see the delta there. On our 3-year history, so 2 prior years completed and year-to-date over here. I've also updated the S&P numbers. The S&P traded 1 time in the last month or so, and you can see the S&P trading the S&P. That's Adam trading the S&P, is at 13%. It is trailing behind year-to-date on the S&P buy and hold strategy. But one of the reasons I'm watching this one and adding it in here was last year the trading strategy on SPY 10.5% positive. So I found that interesting because if I'm making the S&P 500 numbers or close to it, and again, I'm going to hope that I can outperform it, as you saw we did in 2021, and not see some of the downside on a negative year. I'm going to continue to watch this one. But right now, the results are year-to-date 14.56 on buy and hold SPY. Trading SPY 1308, so we're definitely trailing it by, I guess, a little less than 1%. And then our trading strategy on SSO, and you can see how even that compares in the down years, is 26.13%. So that's it for trade 21. We lucked out and got another small gain. I think it's going to be very interesting. You know, we took a 1-day trade. It's going to be very interesting to see, does that trend keep going up and we miss out on some gains? Does price fall? When will we make our next entry? We're going to have to find out on our next trade. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.